digital technologies challenge the assumptions behind established business models. They challenge the notion that, for example, we need in the news business to collect all the news during the day, bundle them up, edit them, print them overnight, and publish the news on the following morning. It challenges the notion that we should go to watch a movie to some place and pay a ticket. However, some things remain unchanged. Even if you watch a movie in Netflix, what matters, what creates the value, is the quality of the content you're watching. We can talk about how the global, readily available audience that Netflix has enables it to fund good movies. Yes, this has been enabled by streaming technologies and makes it easier. We can talk about how analytics provide real-time feedback for content creators and how they actually give suggestions to viewers on what to watch next. We can also arguably say that with Twitter, news comes to us faster than ever. But at the same time, I think we can agree that the importance of good news editing, fact-checking, and news analysis is perhaps more important today than it has ever been. And this is my point for today. I mentioned two examples of industries that have been heavily disrupted, yet they have retained the essence of their core value proposition in the center. Big tech and unicorns have the potential to disrupt, especially banks. You see financial services companies and more particularly retail banks have been relying on a model, on a business model where some of the services we provide, especially some that are very expensive to provide, like access to a branch network, nationwide ATM network, call center where people answer the phone, they're provided for free. And this has been working so far because we charge for other services like taking a loan or doing an FX transfer. And we have been making enough margin to cover the cost of the other services. But this is where disruptors attack us. They take the service lines that we charge for and they will offer them either for free because they may have a strategy that relies very aggressively on data monetization, or they might offer them cheaper because they don't have to cover the cost of branches or ATMs or call centers. Clearly, this is a problem for banks because we either need to unbundle our pricing and start charging in some way for the services that we used to offer for free, or bundle it up in a very different way, or perhaps pursue ourselves aggressive data monetization. This is dangerous. This is dangerous for us. And I'm saying it not because I'm thinking of data monetization as using analytics to provide a better service to customers and therefore be able to charge more for it, either directly or indirectly. That's not a problem. But if by data monetization we mean selling sensitive financial data to advertisers or using it as a platform to build a business that's very different from financial services, then it can be dangerous because fundamentally it can be a breach of trust, the trust that we share with our customers. Trust is our essence that defines our core value proposition. And in defense of disruption, my view is that we need to double up on this core value proposition. And instead of playing the game of the disruptors in their own terms.